Welcome to today's mortgage market update. Today is December 13th, 2022, and lower inflation is making for a beautiful day. So let me get at it and show you exactly what I'm talking about here. Let's go ahead and share my screen. Okay, so what you can see here is we got CPI numbers out this morning. They came out at 8:30 this morning, and I already saw headlines from the news saying that, inflation's up, and it's not true. And this is why. So inflation month over month did rise by 0.1%. Now we were expecting it to be 0.3%. So it actually is better than we expected it to be. Now remember, when you look at inflation, you're going to add up the most recent 12 months. So if you take a look at this chart here, we are adding up from December of 21 through November of 22. We dropped off 0.7% and we added 0.1%. So our overall inflation went from 7.7 to 7.1. Yes, we still have inflation. Yes, it's hotter than we want. But the good news is the federal funds rate hikes have been working. They are starting to work to lower the inflation. So this is the second month in a row where we saw that. So let's dive deeper into it. As I said, the headline inflation was up 0.1%. We went down from 7.7 to 7.1%. And the core inflation, remember, core inflation strips out food and energy. It was plus 0.2%. And we were also expecting 0.3% there. So again, better than expected. We went from 6.3% down to 6.1%. And to break it down a little further, this is where you see that shelter costs. We have been getting a lot of pressure from shelter. Now, we know that shelter makes up 39% of this core rating. So just think of how much shelter is impacting that. There's a lot of other items that are helping to bring it down. So year over year, shelter is up 7.1%. And just to run through this is regular shelter, rent, owner's equivalent rent, and lodging away from home. Now, this lodging away from home is down 0.7%. But what's important to remember is just last month, this number right here, that one alone, lodging away from home, was plus 4.9%. So that's why you're seeing such a big year over year number. And shelter is going to be coming down, but when will it actually come down and when will it help us with inflation? And we're going to take a peek at that in just a minute. So here you're looking at the core inflation since July of last year. Remember, I kept saying we had to get to October's. We had to get to November 10th, where we got October's CPI report. And that's when we first saw the first little bit of relief when it came to inflation. So again, we replaced November with a lower number today for core reading, much better. But see these next two numbers, December and January, they're both at 0.6%. So we definitely have some room here to replace them with lower numbers and help bring inflation down for the next couple months. So, it's positive things are coming. But that roller coaster we're on, right? We are still on a roller coaster. And it's tricky, folks. So we know that shelter is in real time, it's actually over here. Because remember, CPI is lagging indicator. It always comes out a month late, and shelter lags even more than that. So right now, we are down here with what you actually are paying for shelter. But in the CPI report, it's on this upswing right here, okay? So it's putting a lot of pressure on the CPI report. So the trick is we have to get to January, and that's when you're going to kind of hit the peak of it. That is when you're going to see the apex. When we get the most pressure from shelter costs in the CPI report is going to be the month of January. Then after January, like February, March, April, you're going to see that the shelter component will start to actually be an aid. It's going to help us. It's going to lower CPI. And just to put those two numbers together, you have your headline inflation in gold, your core inflation in purple, and it is you can see how they have been for the past 12 months and how it is starting to come down. It's going to take a little while. The Fed is going to continue to increase rates. We know tomorrow They are expected to increase the federal funds rate by 50 basis points. That's 0.5%. It is expected. The markets are ready for it. I don't expect them to do anything other than that. And then we have upcoming Fed meetings in February and in March. And you will probably see federal funds, or the Federal Reserve, increase the federal funds rate at that point. The exact number, we don't know. It could be 0.25%, could be 0.5%. I really don't think they're going to do 75 basis points, 0.75%, but you never know. So we'll just hang tight and see what happens. And as always, if you have any questions, don't hesitate to reach out to the Rebecca Foote Mortgage team. We are here to serve you and help you. All of our contact information is there. Remember, we are licensed in Pennsylvania and Maryland. And if you have any questions, just reach out.